So just last week, Jim Cramer stated that a Christmas stock rally was still in play. However, if we take a look into the S&P 500 ticker symbol ETF SPY, it looks like it did not end up happening.
I told you, Santa is not real.
Now, this is actually hilarious considering that for a while, a lot of people have been stating that if you just do the opposite of what Jim Cramer says, you'll most likely become a millionaire. And the joke was always funny, however, it just got funnier. And that's because there has been alternative analysis that has been coded to do exactly the opposite of what Jim Cramer says, and it's up a pretty significant amount this year alone. Now guys, this is the reason why I say it's very tough for retail investors to thrive, especially when they're looking into the talking heads on the media. This is why a lot of times I say in the Push and Profit program, do not just go off of what the talking heads are saying on CNBC or whatever you see on the news. And in fact, the best thing that you can do is educate yourself and look into the data yourself. Now guys, to be fair, there has been a rally after Christmas back in 2018, if any of you guys remember trading or investing during that time. And there was a little rally after Christmas, after the bleeding going down for Christmas and going into 2019, there was a little bit of a push up. However, the economic data and the environment that we're in now is significantly different from the time that we were in the end of 2018 going into 2019. Completely different. Now, I do want to cover Tesla stock as it's a stock that has been getting a lot of chatter. If you scrape up the data from Twitter, Reddit, and other online forums, you can see that Tesla stock has been getting mentioned quite often. But to also be fair, Elon Musk has been a bit controversial, which could honestly be 100% the reason why everyone is talking about Tesla stock. In fact, Elon Musk has been so controversial that in my previous video, I mentioned that this may honestly also contribute to more selling into Tesla stock. And I'm not the only one that has this opinion, as well as Dave Lee, someone who's a big Tesla fan, recently tweeted a poll stating, is Elon Musk being political hurting Tesla? And a lot of voters agreed that yes, it is contributing to Tesla stock. But what is actually going on with Tesla? Well, we already know that the economic conditions not looking good. Elon Musk focusing on Twitter and not really putting a priority on Tesla, also not good. But also the fundamentals for Tesla, the company itself, are not looking good, as well as we just had some more bad news. Now, Tesla already planned to halt production in China due to COVID cases rising. However, they had to do it ahead of its planned schedule just because COVID is actually getting more out of control in China than expected, which is definitely not helping Tesla at all, as it's down an additional 9% today alone, making it overall down 69% year to date, which is kind of interesting. 69 is a big deal, you know? Which is why in the Push and Profit program, I talk about looking at several different data points. If you're just looking at technical analysis alone and drawing little squiggly lines on the chart, then you're gonna be absolutely screwed. And I'm not saying that technical analysis is bad, it's terrible. I definitely use it, but it's only one data point. And what I'm seeing lately is that a lot of people are stating that because Tesla stock is at these low levels, that it should bounce because it's gonna bounce off this line in the chart. And at the end of the day, look, stocks don't have to adhere to whatever squiggly lines you draw on the chart. Technical analysis definitely has its time and place, but you have to look at the overall picture. And look guys, I'm not saying that I'm the best trader out there. All I'm stating is that you should be a little wary of the people that you follow who claim to be financial gurus, as often most of them don't even have any background in the finance industry. Now, I'm not saying, you know, I'm a big hedge fund manager. I definitely have some background in the financial industry. I was a program analyst for a large financial firm, but at the end of the day, I'm stating that a lot of people that you see online have no experience at all. They don't know how to look at several data points, which is what I encourage you guys to do often, because then you get the little pieces that all add up to point to the direction that a rally is not coming. Now, is Tesla stock oversold? Yeah, absolutely. There's been a lot of selling going on for Tesla stock. However, I want to point out to the fact that on the contrary, back in 2021, when Tesla stock was going up, there were no voices out there stating, well, you know, it's so high up, it's overbought, it has to reverse. However, now that we're on the other side of the script, when things are going down, we hear voices from all over the place saying, well, it has to reverse, it has to reverse, and that's just not how it goes. What really moves the stock market is the buying pressure and the selling pressure. And right now, a lot of funds, I mentioned this in my Push and Profit private group, that a lot of funds are actually leaving the stock market and going into treasuries, as it's a much safer investment, and also due to tax loss harvesting. So we're seeing a lot of outflow out of the market. And of course, when there's more outflow outflow out of the market, what does that do? That lowers liquidity. And when there's less liquidity, guess what? Things become much more volatile. So what are some things that we should pay attention to going forward? Well, number one, I think we should definitely pay attention to the institutional investors. What are people like Cathie Woods doing? Are they going to be, exiting out more out of the market? Are they going to be taking off more shares of Tesla? Or are they going to be pumping the market? The second thing I think we should pay attention to is more on a macroeconomic level, and I think we should pay attention to two upcoming events. One being the JOLTS report, which talks about job openings. We need to see, are job openings increasing or are they decreasing, right? Because that's one thing. And then also, is the unemployment rate going up or going down? Because if we see the unemployment rate going up and job openings decreasing, well, guess what? That will actually maybe tell the Federal Reserve that maybe they should lighten up on the quantitative easing, which would overall help the market. However, if the opposite happens, well, it's going to be more pain. And so again, we have to really pay attention to what happens going forward. At the end of the day, we don't have a crystal ball, and anyone that tells you that they do, you should definitely run far away from them. With that being said, guys, hopefully you guys enjoyed this video, and I'll see you guys on this next video right over here.